Welcome to another episode of Profit Partners. I'm here with Matt Remuzzi from CapForge. Matt, I only have one question for you for today, and then we could end the session. How are you doing?
Great. I'm doing great. I'm doing great. Thanks for having me on. This is the best show ever. Have a
Thank
good
you.
rest of your day.
Thank you. Okay, bye. Yeah, so basically, like you were one of our first partners, and I find it apropos because, accounting was literally my first job ever. I worked for an accountant when I was in high school as a sheets balancer person thing. I balanced sheets. That's all I did.
You did
I
the
did
laundry. Okay, I
exactly.
get you.
I did nothing else when it came to. I was not allowed to touch anything else except for also gathering, client stuff. Now, mind you, a 14-year-old going to a liquor bar, to store to do to balance the sheets was probably not the smartest thing to do. But I will
Well,
say that going to a cookie factory is probably the best thing I ever did, and
there
doing
you
that
go.
job. But all right, talking about cookies, give us a little cookie about what exactly you guys do.
So we do bookkeeping and taxes predominantly for e-com sellers. So we got a lot of people just on Amazon, but also a lot of people who are, multi-channel and whatnot. And, one of the things that almost all business owners hate, e-com or not, is that bookkeeping accounting stuff, right? It always falls to the bottom of everyone's list. And I get it. It's not the sexy part of business. It's not the fun part, but it needs to get done. And if you actually take a look at what it is telling you, it can be super helpful. So that's what we try to do, is help e-com sellers understand their numbers a little bit better, make good decisions, hopefully keep more of what they're making and make more from all their hard work.
So what makes ecom bookkeeping and accounting different from regular? Now, mind you, I know that there's differences obviously between a person and a business, and that each type of business also has their own types of filings and their own types of things that they need to look for and scrounge for or whatever. But e-commerce is a whole ball game, right? So what exactly makes it different?
Yeah, I mean, the biggest challenge with e-commerce is just the way the timing works. So, you buy inventory and you pay for it today, you might not get it for 60, 90 days. And then it finally gets on the virtual shelf at Amazon, right? And somebody finally buys a unit, and then you get paid 2 weeks after that. So between the time you put the money out for the inventory, it arrives, you sell it, you pay for it later. In the meantime, you're also paying for ad spend. You might be paying for a VA, you're paying for insurance today for something, again, doesn't happen for months. And it's not like you sell all your inventory in 1 month. It spreads out over time. And it wasn't just the cost of that product, but at the cost of shipping. And maybe you had tariff or customs or packaging, or you're using a 3PL. So there's just a lot of moving parts, even though, a lot of times it's a small business. It could be one person working from home, right? But it still runs like a pretty sophisticated international import export business. So there's just a lot of moving parts, right? If you're just not just, but like you got a graphic design business or something, right? You do a logo for somebody, they give you $500, boom, that's it. There's, no tricky accounting there. You've spent some time, you got paid, maybe you bought a Mac or, some software, and that's about it. But even for a very small e-commerce business, a one-man shop just getting started, it gets pretty complicated pretty fast. And then you get into, you got multiple SKUs, you're selling on multiple platforms. And like what you guys do, right? You didn't even get all the money you were supposed to get. They lost some of it, and now you got to go chase some of that down. So it's just got a lot more moving parts than the typical business for the size that it is. And that's why it's just over most people's heads to try and do it on their own.
So what type of data do you look at, right? Because there's just so much information that needs to, and also because it spans over a long period of time, what documentation or what information or data do you need in order to basically do your jobs?
So we're looking at everything that we can get off the platform. So Amazon's literally the transaction detail, sale by sale. We're looking at that, how much you sold each product for, because as you know, you can change your prices throughout the month of what you sell any given product for. We're looking at bank statements to see how much you wired out to buy inventory and all the other expenses going out. We're looking at credit card statements. How much did you spend on ads? and all the other stuff that you put on your credit card, and collating all that information together to paint a picture of what happened that month. You bought some inventory, you sold some inventory, you paid a VA, you bought some ads, you paid for insurance, all that stuff is sort of collated together so you can see this is how much overall since I started money I put into the business, money I pulled out of the business, and what's left. And that's the whole goal of understanding that, because a lot of times people go, I don't know, I just keep throwing money into this thing. I know I'm making sales. I don't know if I'm making any profit though. And in the meantime, I just have to keep reordering inventory because otherwise I go out of stock and that's not good for my business. So, that's what we're trying to unravel, is take all those pieces and put them into something that makes sense so people can look at it and go, oh, okay, I had, 25,000 in sales this month and I made $4,000, even though it doesn't feel like it because I just turned around and spent 20 grand on more inventory. But, that's the stuff. If you don't do this, you're really in the dark. You really have no idea if you're getting ahead of the game, if you're just digging a hole for yourself, or where you stand.
When you're doing taxes, like how often are you doing taxes for like, a specific account then?
So for income taxes, obviously that just gets filed once a year,
Right.
but throughout the year, we're looking at, how are you doing? Are you making money? Are you making enough to start worrying about, let's do some tax planning? Should you switch from an LLC to an S corp? Should you put some aside in a self, retirement plan, a SEP or something? Or could you even afford, could the company buy you a car? Let's look at that. So we're trying to plan all year long so that when it comes to the end of the year, it's not like, oh crap, I had a really good year, but now I owe 80 grand in tax. Like, great. So we're trying to plan through the year for that once a year event of paying actual income taxes.
So what goes into the tax planning? Like, th are there certain, I guess, operational changes that you might make or suggest to the company, in order to, I guess, tax plan, to mind you, I still have yet to file my taxes, but I get an automatic extension, so thank God. But it's just because it takes forever to get all the documentation that I need.
Right.
But so as an example, I sat with someone last week who was talking about he happens to be a seller, but also a service provider because I feel like everyone's turning to service providers at this point.
Yeah.
Why not? But one of the most interesting things that he has said that I've yet to hear from literally anyone else is the very first thing that he does is he goes through their inventory to see if they could repackage their items in a way so that their FBA fees are going down, right? Because if they could squeeze in just a little bit, a smaller package and a better package, then Amazon is gonna, charge them less because it's gonna be a smaller package. Is that
Mhm.
something that goes into your tax planning, I guess, repertoire, or is it something totally different?
Well, I mean, those are two different things in terms of ways to save money, right? So tax planning is a way to keep more of your profit and not give it to the government. And then, financial planning and sort of the data that we look at month to month, that's something we can look at and say, wow, your Amazon fees are just kind of out of control. What can we do? And sometimes we'll run a report by SKU and go, look, did you know, your bottom 10 selling SKUs, you're actually losing money on those. So either raise the price or stop selling them. And then, these top selling SKUs that you have you shopped around for an alternate supplier? Have you looked at packaging, right? Is there a way to reduce it? Or maybe you're putting it in this fancy box with all this 4-color printing, and really a poly bag would be fine. Like, your customer, they want the thing. They don't care about the packaging, right? You're not trying to appeal to somebody on an actual shelf at Target, right? They're already ordering on Amazon. They're going to rip the packaging open and throw it out. So why spend a couple bucks per unit on a nice package when you could get a 10-cent poly bag and stick it in that? So we're looking at all the angles, right? All the ways that we can try to squeeze more margin out of the business and then at the same time help them keep more of that at tax time.
So besides for moving, your bank to the Cayman Islands, right? I
Mhm.
mean, I don't know what people do. I don't have money to figure it out. But so what exactly goes into the tax planning then?
So a lot of times, we'll look at how they're set up, and they'll be set up as a single member LLC, for example. That's how a lot of people start out. They just set up an LLC and they never think about it again. But the problem with an LLC is any profits that you make, you're subject to self-employment tax, which is about 15%. You pay the employee side and the employer side of Social Security, Medicare, and then sometimes depending on what state you're in, if you're in the States, there's some additional tax thrown in, but round numbers call that 15%. If you're an LLC and you get to the point where you're making a couple $100,000 a year, you're paying up to the limits, well over $100,000. You're paying Social Security and Medicare on all that. If we switch you over to an S Corp, a lot of times we can then put you on salary, pay you 20 grand a year. You pay your self-employment or payroll taxes on that, but everything above that is now a distribution that's payroll tax free, not income, but payroll tax free. A lot of times just doing that move, you can save 10, 12, 15 grand a year that otherwise you would have been paying out without even knowing the difference. So I mean, that's an easy win for a lot of people, but then, we'll keep looking. Do you have a home office? Are you using your car? Are you doing meals? Do you have travel? What else can we write off as long as we can justify in some manner that it looks like a business expense, that you're using it for business? And then again, getting into, should you set up a solo 401k or a SEP IRA or something? It's basically just math, right? You kind of do the math. Here's what, if you do this, it saves you this much. Do you want to do that or not? And they go, yeah, I do. Or no, I want to hold off. Okay, great. And then just tick it down as low as we can get it. And then at that point you go, well, now, unless you move to the Cayman Islands, that's as low as we can go.
So there it seems to be a lot of stuff, that goes into tax planning and everything else. So when you are working on a client's, I guess, portfolio, like how often do you say you're going to them and saying, "Hey, you are in the bottom and you're just super in the red. Like you got to fix up your how you're running your business because it just doesn't make sense."
It does happen for sure. And sometimes, people never get out of the right. They just pick the wrong product. They're just, it's just not working. Other times people were doing really well, especially we see this a lot of, people who had high flying products during COVID, right? They just were making a killing and they put it on autopilot and they thought, this is it. I'm just going to easy street till I retire, right? But post-COVID, sales dropped off, competition moved in, advertising got more expensive, product costs didn't go down, and all of a sudden, they're still might be selling 2 million a year, but now they're losing money, and they're like, what the hell is going on? I don't understand. So, we try to help them, and sometimes you can turn it around, and sometimes, they just have to. They got complacent, I guess, on it used to be easy. Amazon did used to be a lot easier, right? Back even 5, 6 years ago, you could still potentially rank on organic keywords alone without having to spend money on ads. But I mean, those days are just over. So if you don't have a product that stands on its own, that, has good reviews because it's a good product, not because you bought a bunch of fake reviews. And, if you don't have a reason for people to keep coming and finding you and buying from you, the competition is just going to, eat your lunch and you're going to be out of business. Or not that you're not going to keep selling, but you're going to lose money on every sale. And, how much of that do you want to do before you throw in the towel?
Yeah, so do you guys also do price analysis on the sellers? Because obviously people could be selling the same exact or almost the exact same exact type of stuff. 100,000 people could be selling pencils, right?
Mm-hmm.
But my pencil is different because it does this, or hey, we're all selling the Tacundra, number two, number whatever number it was, pencil.
Yeah.
And things are priced all the time differently on Amazon. But at the same time, you don't want it to cut in your margins. So do you do price analysis to, I guess, optimize their profitability?
Yeah. I mean, what we kind of say is, based on your costs, right? You've got to sell it for at least X just to even break even, right? And then everything over that is into profit. But then at a certain point, obviously, the higher the price, the less you're going to sell of it. So that's the challenge. And what we always advise clients is, again, you want to give them a reason to hopefully be able to have a premium price and not have to just compete on price. Because then, unless you're the pencil factory, you're never going to be able to make any money because those guys are selling direct. They have the lowest cost, right? Anybody that's buying from the pencil factory and then reselling is automatically at a disadvantage if you're competing directly with the pencil factory. That's just the way it goes. And more of those guys, the pencil factories, are now selling direct. The Chinese companies have their own listings on Amazon and they can survive on pennies a day and the rest of us can't. So then it's like, okay, well, how do I get my pencil endorsed by Kim Kardashian or something, right? And then I can charge $8 a pencil and make money. And it's not the same as every other number 2 pencil. It's the Kim Kardashian pencil or the, whoever. So, or whatever the product, or you've got a product that is uniquely yours, right? If you come up with something that is completely yours, you trademark the brand and no one else can knock it off. And no one's even trying to look for something else. They want, like, this is like Stanley cups, right? I mean, it's just a stupid cup that holds water, right? But
Yep.
it's the Stanley cup and people are willing to pay a premium for that cup. And you can have all the competitors you want, all the knockoffs you want, but if somebody wants a Stanley cup, there's only one place to buy it. And there's no reason for them to then discount it because they've got a line out the door of people that want to pay a stupid price for a cup that holds water. So, that's the position you want to be in with your products, is to be the premium brand or the brand that, is recognized for something special that they're no longer price shopping. And if you can get there, then you're in great shape. And if you're just selling a cup or you're just selling a pencil, good luck.
Yeah, no, that's for sure. How should I phrase this question? I don't want people getting really upset by this question. At what point do you say to someone, you should really just put your business down in the ground and bury it 6 feet under?
Well, I mean, we have that discussion and it's more about, do you have a turnaround plan? Because if you don't have a turnaround plan, it's just going to keep racking up debt, right? Or just draining your savings. So this is where you're at. This is what the current trajectory looks like. You're going to be out 100 grand in the next 12 months if nothing changes. So what's your plan to change? If you don't have one, then you seriously consider, do you want to just throw another 100 grand into, the dumpster fire that you've currently got? Or do you have a plan for, and sometimes they go, oh, no, I know I'm losing money, but it's building towards a bigger strategy and I'm going to launch these other products. It's all going to make sense. Okay, good. I'm glad to hear you have a plan and I hope it works out. And if they go, geez, I didn't realize, no, I don't have a better plan. And, no. So, well, then, you might want to consider closing up shop and either trying something different or, a totally different kind of business. A lot of people get into Amazon and e-com because they saw some YouTube videos or some TikTok people that go, oh, it's so easy. You make, you buy something cheap on Alibaba. Look, you can get a little pocket knife for 99 cents. Then you can sell it on Amazon for $9.95 and you make the difference. It's so easy. And they get sucked into this and they buy the courses and they buy 1,000 pocket knives. And then they find out, yeah, there was a lot of information left out of that little 5-minute TikTok. And it's not as easy as they made it sound. And next thing you know, you're out 20 grand. And you're like, do you really want to keep going down that rabbit hole? Or do you want to stop now while you still can? People just don't get into it this is a business. It's just like anything else, right? It's not a great get rich quick scheme. It's a competitive, data-driven, complicated import-export business. And if you're not prepared to get into that and you don't have a plan to be successful and be different than every other dude getting into it, then probably think twice before you pull the trigger.
So you mentioned that you work across a plethora of different e-commerce, company, I guess, e-commerce platforms, for in regards to taxes and bookkeeping and accounting and et cetera, et cetera. What differs Amazon from the rest?
Well, Amazon is like a giant flea market, right? And what you're paying for there is to get a table at the flea market. And they've got hundreds of millions of people browsing around. ready to buy stuff, right? And they're looking for specific things. So Amazon has shoppers that they will put in front of your product. They will wander by your flea market booth. And if they like what you've got more than whatever else they found, they will buy. They have their wallets out, they're ready to buy. But for that privilege of having customers who are ready to buy, Amazon's going to take a big chunk of whatever you sell your product for. The other platforms are the opposite. They'll let you set up your flea market booth, but it's up to you to bring anybody by, right? Otherwise, you're out in the middle of the desert and there's nobody there. So you've got to then put up all the signs and banners and get people to pull off the side of the road and check out your little stand and see if they want to buy. So Amazon charges you the money for having live customers. The other places, Shopify, BigCommerce and all those guys, they are the other side where you can set up your store, but you got to find your own customers. And then it's just a balance of, is it cheaper for me to find the customers, or is it cheaper for me to pay Amazon to bring the customers to me because I can do enough volume? And then, Walmart is like a version of Amazon, but with a fraction of the traffic. And then, you can also sell on Home Depot and Wayfair and some of those other places. And if you've got the right kind of product, you can do okay there. Chewy, if you've got pet products and whatnot, that they're all kind of a version of the Amazon. We'll bring the customers and we'll charge you, a fee to be in front of our customers, or you find your own customers. And again, if you've got a strong brand, you can set up your own store and skip all the Amazon fees and do really well. But what happens is, a lot of times people will find your brand. Oh, cool, a Shopify store. I love this. I definitely want to buy it. Let me see if it's on Amazon.
Yep.
And they'll hop right over to Amazon. And so all the money you spent to drive traffic is gone, but they're still going to Amazon. And now if you sell on Amazon too, you're paying Amazon all the fees. So it's a tough gig. I mean, there's no getting around it. This is not a slam dunk kind of business.
Yeah. Sometimes I'm very happy I don't sell on Amazon. But there are many times when I do feel like I would do so much better than other people, not in terms of like selling, because you know, it just wouldn't work out. But in terms of management, in my opinion, I have found with many an FBA seller that they don't necessarily have, their ducks in a row. Right? Like they don't have their invoices, they don't have their bills of lading, their shipping stuff, their documentation. Basically, the most common things that you need to run a business, especially in terms of documentation, they just don't have. And
Yes.
in that light, have you ever run into those types of cases with your ecom clients, or not clients anymore because we got rid of you because you're annoying?
Yeah, I mean, it's definitely, some people are pretty organized, and the things we need, they're able to give us pretty quickly. And other people, like you said, are, they just don't seem to have that stuff together. And I think sometimes they think, well, they hire us, and then that's like a magic bullet where we're just going to automatically be able to do all these things. I go, no, it's a two-way street of communication, right? I'm going to do as much as I can for you to take it off your plate, but I can't get you to zero. I can't magically know when you've ordered inventory or how much you paid for it, or that you launched a new SKU, or that you decided to sell on some other platform, unless you tell me. And if you don't tell me, then of course I'm going to be missing information, and you're going to look at these and go, well, that doesn't seem right. And I go, well, why not? Well, where are all my eBay sales? I didn't know you had eBay. So, those things, are still going to happen. So we try to educate our clients about what we need from them. And as much as we try to lighten the burden, it's never going to get to zero. And we try to make it as easy as possible for them, to give us what we need and not spend a lot of time having to go through stuff. But it's still, there's still some. But I mean, look, you're trying to run a 6, 7, 8-figure business. That's not going to come with an hour or two a week of work, right? You're going to have to put some work
Yeah.
into it on your end if you want to get to that level of success and have it be profitable. So that's kind of the trade-off. I think sometimes people, again, think like an e-commerce business. Oh, I saw a guy who was on this laptop at the beach and it was so easy. Yeah, that was a commercial, dude. That wasn't real life. So there's definitely work in this. You can't expect to get paid big bucks without putting the effort in. That just isn't how life works.
Right. And mind you, I work like 16-hour days and I still have yet to see the big bucks. So it's
Right. I mean, you've got to
fine.
put that front end time in, and then there's still no guarantee it pays off. You just
Exactly.
bust your butt until, until you figure it out.
So when it comes to let's talk about profitability, in taxes, right? What do taxes look like for e-com sellers, right? For anybody in e-commerce, because especially with Amazon, there's so much they're already paying Amazon for a lot of things. There's so much that Amazon's already taking, a big chunk, out of whatever sales. In addition to that, there's, people are probably paying for advertisements. They're probably paying for this. They're paying for SEO, PPC, website stuff, pictures, this, that, listings, basically do whatever they paying for whatever they can so that they don't necessarily have to do the work. Plus, they're also paying you, for taxes and stuff. Like, and then they probably have to pay taxes. What profits are Amazon sellers actually seeing, you know,
It,
in their
yeah, I
business?
mean, it really depends, right? So I would say the sellers who have their act together, they're doing a decent volume and they have a differentiated product or suite of products or collection of products, whatever you want to call it, they can be doing 15 or 20%. That's a pretty good, well-run business. So if you've got $1 million in revenue, you could be making $150,000 a year if things are working out for you. You could easily be making zero or losing $100,000 a year. But if you've got your act together and you're doing a decent volume, you could be making 150 to $200,000 a year. Now there are some sellers who have, unique high margin products. We had a seller, have a seller as a client who sells a proprietary face cream that is for a specific skin issue. I think the tubes he sells are like 29 bucks a piece for the tube, and it's $1.50 worth of ingredients in it, right? So when
Wow.
you've got margins like that, you can spend a lot on ads, you can dominate the top of the listings, right? And you can do a lot of volume because it's a widespread issue that people have, and they're willing to pay a decent amount for a solution that works. And it just so happens that the cost into the product is very low. So he does very well, way above the average. But like it always says in those commercials, right? these results will vary. This is not typical. Don't, go home and figure that with $1 million in sales, you can make $600,000 a year on Amazon. That's not going to happen for 99.9% of us. But that's the power of having a unique branded product. You can do well with that. And for, like I said, the majority of clients in that position, not even a super powerful high margin product like that, but 15 to 20% profit is a good amount to shoot for. If you're less than 15%, that probably means you have some work to do to improve your business. And if you're 5% or less, you're really, should you be in business, right? Or should you completely rethink the products you're selling? Because 5%, there's just once you reorder inventory or you have a couple down months or whatever, you're effectively going to be at zero.
I mean, unless your 5% is from like over 100 million,
Right. If you're doing tremendous volume. But the problem with that, because we do have some guy, like in the computer hardware, selling hard drives and stuff like that. They work on low margins, high dollars. But again, a couple bad months or a shipping delay or stuff. I mean, you can go from 5% on 100 million to minus 10% on 100 million
Yeah.
pretty quick, right? That's just, I don't, I don't want to walk on a balance beam over a big canyon, right? That's too scary. I want a nice wide bridge. So I've got plenty of room. If I, waver a little bit, I'm not going to fall into the abyss.
Amazing. And now I've yet to talk about this in any of them, in any of my podcasts. Now, mind you, I've had very few, so yay. But I feel like you're one of the few people I can actually talk to about this, and that's what I, generate, which is reimbursements. I provide reimbursements.
Mhm.
And for those who hopefully are listening, reimbursements are basically what Amazon owes you for mistakes that they made on your account. So, how do reimbursements play a factor in taxes?
Well, so if you don't get the reimbursements, you've lowered your tax bill, but by a fraction of what it would benefit you to get those reimbursements. So let's say you're in the 20% tax bracket, you're doing pretty well, right? And $1,000 of reimbursement is owed to you that you don't collect. Well, okay, so your profit is lowered by $1,000. It saves you $200 in taxes. Would you rather have $200 saved in taxes or $1,000 actually in your account? Right? So the reimbursement value is always going to be more beneficial than any tax savings you get by just letting the money go by the wayside and Amazon keeps it or whatever. So, and people, kind of make that mistake all the time or don't get it. I had somebody just ask me yesterday, what if I donate 10 grand to charity? How much will that save me? Well, and it's again, 20% tax bracket, a $10,000 cash donation to a charity will save you $2,000. Oh, really? It saves 2,000? Yeah, but you're out 10.
Yeah.
Right? You see what, right? What's better? Would you rather have the 10 and pay 2,000 in taxes? You still have 8,000 in your pocket. Or would you rather contribute 10,000, to the charity? Great, good for you. And you save 2,000 in taxes, but you're out the 10. So, you know,
Look,
so
if the
my advice
guy
is get all the reimbursements you can get. They're worth more than anything else.
Look, if the guy wants to donate, here's my number. Yeah, my email. Here's my bank account information. I won't give you
Yes.
the documentation you need for it, but I'm happy to receive it. Okay, yeah. So the reason why I was asking about reimbursements is that, when it comes to reimbursements, these if people aren't claiming them, how do they look on your system, right? Because you're also coming, right? The way that we get them is that we comb the data and we look for certain things, and then we're able to make those claims and hopefully get them, especially in cases where we need seller help, to provide certain documentation. But let's just say you're working with a company that isn't using reimbursements, or it isn't doing anything regarding reimbursements or aren't using reimbursements platform like us and only us because we're the best. Um, how does that look on your side?
So what it looks like essentially is a higher cost of doing business. So it's money they've paid out that they didn't have to pay out, but they did. And as a result, it directly reduces the profit that they make. So if you think about, let's say they have $10,000 in sales and they paid, just to keep the math easy, Amazon took 4,000 of it, 40%, right? But really 2,000 of that was money that they should have been reimbursed, right? It was Amazon made mistakes. They didn't account for it correctly. They lost product, what have you. $2,000 of that should have come back. So instead of, the 40% that they paid to work through Amazon, it really only should have been 38%. And that difference goes directly to their bottom line. So to us on our side, everything you pay out to Amazon just looks like a cost of your doing business with them. If some of what you paid out to them should come back to you, that would reduce your cost of business working with Amazon and increase your profit. So if you don't collect that, then you've just reduced your profit, increased your cost of business for no reason. It's the same as if you overpaid for your product. If your vendor sent you an invoice that was incorrect and you just said, oh, screw it, I'm just going to pay the extra because I'm just a good guy that way, I guess. It's this, you've just increased your cost of doing business for no good reason. So going after those reimbursements, it's your money. It should be part of your bottom line profit. So by not collecting it, you've just shot yourself in the foot, really. You gave up money that you should have earned for no good reason.
So when I know that there's some things called business expenses, right? And that supposedly can help you with deductions in terms of your taxes and stuff. How does Amazon's fees because they have thank God they have a plethora of fees and they keep creating new ones, how do those fees factor into taxes? Are they considered a business expense? Are they considered, you know, sorry, like he sucks for TVU. And not only that, but also in terms of reimbursements, um, if you use a reimbursement, let's say you get a reimbursement back and you decide to use that reimbursement money, I guess, for the business in some sort of way, whether it's, a coffee expense, so you pay for the gas, or to let's say it was from, lost inventory, you get that reimbursement back, you decide to use that money to then repurchase inventory, to restock up. Is that considered a business is that considered a business expense? Is that a good way of using the reimbursement, or is there a better way tax wise to use that reimbursement besides for obviously paying David Shanklin?
Yeah, so everything you spend with Amazon is a business expense. Um, and if you were to get a reimbursement and then use that towards ad spend or more inventory, that would also be a business expense. All of those things help lower your ultimate tax bill. But the difference is by getting the reimbursement and then say again, it was a $2,000 reimbursement and you turn around and then put that into ads, that's $2,000 you didn't have to take out of savings or somewhere else to put into ads. Or if you buy inventory with it, and then you turn around and sell your inventory for 4 times or 5 times what you paid for it, that's a business expense to buy the inventory, but ultimately driving more profit. So it's really the difference between, having to come out of pocket or invest profits into the business versus being able to recapture and spend money you've already spent back in a more productive way than just letting it go to Amazon and basically equate to higher than you're already paying Amazon fees, right? It's like they hit you with a fee increase by not giving you money back that they should have given you back. It's effectively they've increased their fees and instead of paying you, only charging you what you should have been charged in the first place.
Is there a better utilization of the reimbursements that someone receives tax wise? Somebody could decide whatever they want to do with the money, but I'm saying tax wise, tax planning, financial planning, is there a better usage of the reimbursements, or in your opinion, putting it back into the business and making sure that it becomes a business expense is actually better?
Well, I mean, the best thing they could do is hire me and give me the money, and then I will come up with more tax savings for them than that amount that they spent.
That was phenomenal. Thank you.
That's what
I,
they should do with it.
I love that. That was amazing. What is one thing you feel ecom people just are not doing? Besides for hiring you, obviously, and besides for hiring me, which shame on all of you, by the way. Like really. Just shaming all over your face. Like what is one thing you feel that ecom people, especially Amazonians, are not doing on a financial and tax perspective that you feel that they should be doing?
I think from what I've seen, most people are not trying hard enough to get the cost of their products down to really optimize it. Like the guy you were mentioning earlier who said, really look at your packaging. If you can get down to the next smallest shipping size, right? That saves you money. I think a lot of times too, people go, okay, I'm going to sell whatever, a record holder. And they find the first supplier that they can find. They go, oh, that one's pretty cool. It's $12 a unit. I'm going to go with that. Well, if they'd shopped a little harder, they might have found the same thing for $8 or $6 or whatever, but they just kind of take the first one they get and they're like, wow, I'm not hardly making any money on it. But I mean, how hard did you try to source your product? Did you compare? Are you continually comparing? Just because you've got a guy now who's selling it to you at a price you're okay with, are there better options out there? Because that cost of the product is one of the single biggest expenses that e-commerce sellers have, that and advertising, right? And that's the other place a lot of people, they spend money on ads poorly. They don't really optimize. They let ads that aren't working keep running. Oh, maybe it'll work this month, even though it hasn't worked the last 4 months. Or they let these agencies talk them into, oh, you know what, you should try this, try that, I got to spend money to make money. And then before you know it, well, I'm losing money. So
Yeah.
that's not working. So I think, trying harder to really bring the cost of the product down and trying hard to really optimize that ad spend and build their own brand so they can spend less on just trying to get generic keyword traffic. Those two things are what's going to, allow the ones that are going to be successful to really be successful. And it's what's keeping the ones who are marginal or not successful from ever getting to that point.
Wow. I feel like I need to tell that to like every single person I've met. Something you talked about regarding, pricing and stuff. Someone else who I've spoken to said to me that, people think that putting the price of an item as high as possible is like the best option for them to become profitable. But in reality, it's having a competitive price that, because let's say you buy, a watch, I don't know, like a regular watch for $3 somehow, I don't know. Congrats, right? You buy, we'll say children's watches, those, fake children's watches, right? $3, a watch, and then you start selling them for $12. So like maybe that's great, but potentially, if you lowered it to, I don't know, 7, you could still be making profit on it. So when people are pricing, obviously, right, you're absolutely correct. When they are inventory shopping and they need to find, providers and vendors who are going to be providing this stuff, they need to shop around to find the best price for them. When it comes to their own pricing though, how like is there like a magic percentage number from what they originally bought it for to what the price should be? Like, meaning, let's say price is X, multiply by X percent, uh, divide by X percent, and then, and then it equals
I
here's
know
your
what you're saying.
price.
Yeah, I mean, that there's a temptation to think that there's a formula that you could use to optimize it, but it really, price and cost are totally disassociated. So if you go back to my example earlier of the client we have with the face cream, right? If he looked at his product and go, okay, it cost me $1.50 for a tube of this stuff. I could sell it for $6. I could be making good money and I'd probably sell a ton of it. But is he leaving money on the table, right? Yes, because people will pay $29.95 for it, or they might be willing to pay $39 or $49, right? Because if you've got whatever the condition, let's just say it's warts all over your face, right? And you're like, oh my God, I'm hideous. But I can buy a tube of this stuff, put it on my face for a week, and all of a sudden all the warts are gone, and now I'm beautiful again, right? That's worth $30 to me, or 50 or 100. It does. I don't care what the stuff in the tube costs. You might have gotten it for free. It might grow out of a bush in the back of your yard, right? And you're just scooping the stuff up. I don't care. I'm paying for the solution. I don't care what the cost was. And on the flip side, you could have a product, a little black box electronic thing that does something amazing, but if people don't care about it, like I'd give you $5 for that. You're like, it cost me 1,000. Like, yeah, but it's worth 5 to me. So I don't care what it cost you. This is what it's worth to me. So the price versus the cost is really, it's those, although they seem related, and generally speaking, stuff is marked up 2 to 3 to 4 times cost versus price. Generally, it really, that's just I don't want to say coincidence, but that's the market kind of says, well, look, if this guy's making 10x, I'm going to come in and sell it for 8x. And the next guy goes, well, I could sell it for 7x and stuff, right? And that's generally what keeps the prices sort of under control, because as soon as you're making too much money and someone else figures that out, they undercut you, but only to the point where everyone can still make a few bucks, right? Because otherwise, why would you sell it, right? You're not going to keep selling it at a loss. So the goal again is to have a product that can't easily be knocked off or is differentiated for some reason, and people are willing to pay a price that, the highest price you can get for it without relation to what it costs. And then now you've got a great product, and all the way to, there's extremes, right? What is a little square piece of paper like this is probably worth a couple pennies, right? But if it happens to be a lottery ticket printed with the winning Powerball numbers, now all of a sudden that little tiny piece of paper is worth $900 million or whatever. So price and cost is unrelated, and you shouldn't try to figure out what the price should be based on what you paid. You should try to figure out what the price should be based on the maximum amount you can get the most people to be willing to pay for it, because they see the value in it, not because of whatever it costs.
That's an amazing point, and I really like that. I'm definitely going to be using that lottery ticket at some point, and hopefully I win
You're right. And I got it.
it. When it comes to um holiday season, right? We're coming up on Memorial Day weekend, and the people. I love Americans. Americans will buy at any point in time for any particular reason, and yeah, just get whatever they can. And Memorial Day weekend is one of those random days, in my opinion, that people will just stock up. It's like I know lots of people that Memorial Day weekend is like when they start shopping for 4th of July and when they start shopping for Christmas. So my question is, when it comes to any holiday shopping extravaganza, we'll call it, how does that affect um, I guess profit margins, taxes and stuff? Because a lot of times these people buy in bulk, which is great, and you hope that your products is one of them. But at the same time, people usually take percentages off. People usually give discounts or referral this or this, that, whatever. How does that affect, a seller's, I guess, bottom line?
Yeah, I mean, it definitely, you have to know who your customers are, and if they're the kind that are gonna buy in bulk or stock up or expect to see discounts, you kind of have to be prepared for that. Get inventory in so you can meet that demand. Is, nothing ever worse than running out of inventory. Somebody wants to pay you money for something and you don't have any left to give them. But then, yeah, I mean, a lot of times, they're expecting the big Memorial Day sale or whatever, a Black Friday sale, Christmas discounts. So you have to kind of know that you have a price that you can bake that into and still make it make sense for you. Or that, okay, if Memorial Day weekend, we normally sell twice as many as we sell any other weekend. So I'm okay with discounting 25% because I'm going to do double the volume and it's still going to work out for me. That comes back to kind of, again, working with us or somebody like us, so your numbers, so you can make those decisions from a place of, yeah, I know the math works, rather than, gosh, maybe I should just do a discount and maybe I'll have enough sales that'll make up for it. Or you know just kind of shooting from the hip, where you may end up, wow, we did 4 times the volume we normally do, but we lost money on it. Like, well, that was stupid. Right? So you want to be able to make those smart decisions because you understand what the impact is going to be on your bottom line, because that's always what it comes down to, right? Why run a business that takes this much time and this much effort and this much money invested if you're not going to get something for it, right? If all you're doing is basically subsidizing the purchases of the customers who are paying less than they really should, because you're basically giving them a couple bucks with every sale out of your own pocket to buy it at a cheaper price.
So I happen to live internationally, and my tax situation is always great. I love paying double tax. It's just, but in any event, I'm not talking about me though. When it actually, you know what? Why not? Not me specifically, because my story is just too sad. But like, if you're an international seller, right? You are based, I don't know, let's say Estonia, right? You're based outside of the US, but your store runs in the US. Okay. or your main store runs in the US. And then let's give another example, right? You are a guy who sells across the world. You have Amazon US, you have Amazon Canada, Amazon Mexico somehow. Congratulations. Amazon somewhere in Europe, Amazon. I just found out that they opened up in South Africa, so you have now Amazon out South Africa, right? Um, how does one, do you guys cover that? And two, how does that how does that affect tax planning and taxes, especially US taxes? Because obviously, if you're in a different country, whatever, I'm assuming you have to work with, with those countries and their US, and sorry, and their tax laws, and then you could just call my father-in-law, who's a national international tax attorney. But not for e-commerce. But yeah, how does that affect everything? Especially for
So
you.
for Yeah, I mean, for international sellers who set up a business in the US, we absolutely have a lot of those clients. We'll help them do the US side of things. Here's your US accounting, your US tax situation. A lot of times, I mean, there's a lot of countries that have a tax treaty with the US. So intending to avoid the double taxation, right? If you're paying your taxes in Estonia, then the US won't charge you. If you're not paying in Estonia, then the US will. So, to the extent that we're comfortable with US law, we can help them up till basically it gets to the border of whatever country they're from. And they go, okay, well, here's what the US considers your tax bill and your tax situation. And then once you kind of take the money across the border, you need a local CPA or whoever, whatever they are in your country, to help you on that side. So we do have a lot of people in that situation. And actually, the US is pretty reasonable when it comes to, surprisingly, is pretty reasonable when it comes to dealing with people selling from other countries. The bigger challenge really is when you're a US seller or just a worldwide seller, because in the US, what we get used to is sales tax is added on top of the price of the product, right? Something is $10, you end up paying 10.65 or whatever, right? That 65 cents goes to whatever state it was. But in most of the world, they have VAT, value added tax, and that comes off of the price you paid. So you pay $30 or 30 euros or 30 pounds for something. And out of that 30, even though you at the point of purchase don't pay any extra, 16%, 20% sometimes comes out of that 30 as a tax that you pay. So
Yeah.
US based sellers a lot of times really struggle with how much it is and how that works, and then figuring out what do I need to charge so that after 16 or 18% comes out, what am I left with? And then Europe in particular has a lot of, they've been doing added sort of carbon, climate change sourcing, extra fees, and
Yeah.
it just gets really complicated. And if you're not sure, like you said earlier, right? As Americans, we'll buy anything. We're just a
Yeah.
consumer-driven society. You could put any piece of plastic crap in front of us, and people, oh, that's so cool. I got to have four. But you know, other countries not so much. So just because your thing sells well here doesn't mean that over in France or Germany or Belgium or whatever they're going to buy it. Or even if they buy it in Belgium, they still might not buy it in Germany or France, because even though we say Europe, it's really a collection of dozens of countries, each with their own way of looking at things, their own language, their own rules. And it's not necessarily the same seamless sort of experience as you would think here. Sometimes we hear from our own clients who go, oh, I'm doing great in the US, I'm going to start selling in Europe. It's almost the same size as the US, so I should expect my sales to double, right? No, I would not expect that at all. You really have to go slow, test it, test the price, test the acceptance of the product. And again, like in the US, right? We have bigger houses, we have storage, we buy stuff in bulk. 36 rolls of toilet paper at a time is nothing. But you go over and look at an apartment in Madrid or something, right? There's barely room for 4 rolls of toilet paper. So it's just not the same. So you have to really understand what you're getting into if you're going to plan to go international, all the rules, all the fees, all the compliance, and then just the different mindset of the customers, because they're not the same customers as the US. Not that even the US is all the same, right? From, there's different regions, but generally you can sort of say there's an American consumer, but there's not a European consumer. There are 29 different countries or whatever in the European Union, and those guys are not all the same, buying the same way, buying the same stuff.
Right. So the question that I originally wanted to ask, but decided that the other one was more important, is with returns, right? If obviously everything impacts profitability, everything impacts revenue, everything impacts market share, everything impacts taxes. You know, if there's one thing that I've learned, taxes will remain forever. And when you have when you have somebody buy a product, and I mean, I would love to know what the statistic is, so I'm assuming it's very high, and I'd be shocked if it's low. In my opinion, because especially with US, with US citizens, Americans just love to buy stuff, but Amazon has made it so easy to return stuff also that people just love buying to return. Now, I don't think that they're buying just to return. I think they're not afraid to buy because Amazon will reimburse you properly and will, at least the consumer, the FBA seller, screw you. But when it comes to returns, things are very different with FBA sellers. Like, or even FBM, I guess, even vendors and stuff. But let's say you're a seller, so many things can happen. Let's say you're shipping internationally, right? Like, let's just say you're shipping from the US to, I don't know, to Germany, right? And the guy's like, "Oh, this is great, but I really don't want this, so I'm going to return it." And that return can take a very, very long time to eventually get to the warehouse. Additionally, let's say, and this literally just happened to our competitor. And I laugh so hard where basically the customer had asked for a refund and returned, product, supposedly. It was a $200 watch case, whatever that means, and returned a brick. Yeah. And it wasn't found out though, because it wasn't found out until they did, it went from the FBA warehouse and then they did a removal order to their actual warehouse. And that's when they found out and they're like, what? In both of those types of scenarios, what do you do?
Right. Well, there's two kinds of returns in the accounting world. There's the returns that are sellable and returns that are unsellable. Returns that are sellable are, they go back into inventory, you get the money back predominantly, and then you can sell it again, and it's just like as if nothing happened. If it's unsellable, then essentially you've lost the cost of the product, right? But you didn't get any money for it. So it just adds to your cost of doing business without any benefit. So if you normally make 25% profit margin, but you had a lot of unsellable returns, that's going to cut right into that profit margin because your cost went up. You had to supply more inventory to make the same amount of sales. And it's, it depends on the product category. A lot of people, to your point, right, it's because they've made it so easy to return, especially clothing is one of those categories. It's just tough, right? People order 6 different colors in 2 different sizes and end up returning, 11 of the 12 items. And then, oh, I'm going to, the large red pants I like, but the rest of them go back, right? I don't like the color. I don't like the fit, whatever.
Yep.
And if each of those was in a plastic bag and folded up nicely and whatever, and people tore the bag open and put it on and whatever, and it's got cat fur all over it now or whatever, that's going to cost a certain amount to recondition those, or they've just lost it altogether. It goes into a big pile. Maybe they liquidate it or something, but they're getting pennies on the dollar for what should have been an original sale. So if you're not careful, if you've got a 15% profit margin, but you've also got a 15% return rate of unsellable products, you're in trouble, right? That's
Yeah.
not a good place to be. So you've got to, know what category you're in, account for returns, hopefully do as much as you can to minimize that, right? Put a really good sizing chart on there so people aren't ordering the wrong thing. Really good lifelike colors into the pictures so people, oh, I thought it was pink, it was salmon. Oh, I hate salmon. And that's why people shy away a lot of times from electronic products, because those tend to break more quickly, or people are just dumb. They don't read the directions. You know, they're, oh, it's a USB-C and my big fat USB won't go in. Oh, this thing doesn't work. 1-star review, send it back. Just, you're a moron. That's the problem. It wasn't nothing wrong with the product, but now you've opened the box, you lost the instructions, you lost the foam packaging, you broke it on sending it back, and I'm out the $30 it cost me. I don't get $100 out of the sale anymore. So yeah, I mean, returns you have to think it through. It has to be part of your strategy and part of your cost of doing business to bake that in. Otherwise, again, you're like, well, we can make it on small margins. Not if you get, you know, you start getting returns, that margin goes to zero.
So fun.
Like I said,
What,
this stuff is not easy. It's running this business. It's a full-time job for somebody who really is focused on running the business. It's not a sit on the beach with a laptop deal. It just isn't.
when I was at Prosper, it's actually funny that you mentioned that. When I was at Prosper, I met a couple, and then separately I met someone else also. Both of them were literally just starting. The couple had one of those gurus, telling them this and that, and, a mentorship program, right? And they were getting their first shipment in the like that week. And I said to them, that's great, like, so why are you here? They're like, we felt like we should learn a little more. And and I'm trying to sell, like, my product and everything else. I literally turned my tag to the side and I said to them, look, guys, I've been like, I just started, in this business, as like a service provider, and I'm gonna tell you right now, you better hit every single place that's here, because guaranteed you're going to need them in some form or another, because it is not easy, it seems.
No, no.
I just didn't get it. Like, they circled a few times, and it got to the point where they sat down, like where I was sitting down, and they were like, oh my God, what have you jumped into?
Yeah. Yeah, I'm sometimes just blown away by the amount that people spend on coaches and consultants and gurus and classes, and they've yet to sell their first product, and they're just, I don't know. Yeah, it's going to be a long road if you get there at all.
Yeah. What is Because we've been doing this for an hour, and I could probably talk to you for another 600 hours.
Yeah, you
But
probably should wrap it up in the
I
interest of some
please,
other calls today.
that's lucky for you. I should probably sleep for the first time in a few days. But I do want to end off with this question, because you already gave a tip, but I want to know, is there something that we didn't talk about just now, in our lovely session, where that you think is absolutely critical and vital and valuable information for e-commerce, anybody on e-com to basically know, utilize, or perform, do whatever to enhance, increase whatever it is, that you have, um and especially for Amazonians, what do you got?
Yeah, I mean, I think my number one piece of advice for anybody who's either starting out or sensing that their business isn't doing as well as it could, what I suggest is really figure out who your customer is. And that seems so obvious and simple, but here's the thing. 99% of the e-commerce people that I run into, they all started with finding a product. They started with product research. I'm going to sell pocket knives. I'm going to sell number 2 pencils. I'm going to sell whatever it is, right? They started with a product. They found a price. They figured, okay, I'm buying it for 3. I'm going to sell it for 12, and what I'm going to put keywords up there, number 2 pencil. And they're just trying to hustle a product. And they have no idea who the customer is, and they have no idea why the customer would want a number 2 pencil, or what's good about a number 2 pencil, or what's not good, or what the right price is, or any of that. They're just trying to sell a product. The people that I see doing really well, like, again, going back to the guy selling the Warts cream, which is not actually Warts cream, but for this example, it's Warts cream. you find the customer, somebody with a problem, somebody with an affinity for something, right? It could be guys that like to fish for salmon in the Northwest, or people with, a certain kind of warts, or people who are into needlepoint. Okay, needlepoint. What do people who do needlepoint want? Maybe they want different kinds of designs, because if you look at needlepoint, it's all flowers and birds, but maybe they want needlepoint for something unusual. Maybe they want something from the Addams family, or scary needlepoint, or I don't know. I'm making all this up because I'm not into needlepoint. But you figure out your customer base, people who do needlepoint, and then you figure out what do they want. Maybe they want kits, maybe they want different color thread, maybe whatever it is. And then you find a product that meets that need, and then you build a constellation of products, and you're in that community. And then pretty soon people are like, oh, in the needlepoint community, this brand just came out and they've got cool products and they've got great prices and the whole catalog. And pretty soon you've got an email list, and pretty soon they're telling you what they want next, and they're even placing pre-orders. And it's all like, I'm not shopping price anymore. I just love this brand of needlepoint because they get me. They do, cool cat designs or whatever that I can't find anywhere else. Now you've got a real business. You've got a customer base that loves you. You've got a brand you've built. You've got products that aren't dependent on competing on price or generic keywords. That's a real business. If you're just saying, I'm just going to sell needles and thread and hope somebody wants it, right? You're already kind of lost, because the needle and thread factory is going to undercut you on price, and there's no other reason for them to buy from you except for the lowest price. So you've lost. So my number one tip to anybody who's thinking about e-commerce or wants to blow up their e-commerce business or whatever is, don't focus on the product. Focus on a customer group. Get to know those customers. Understand what drives them buying decisions. Find out what's missing in their lives, what products aren't available that you can sell them, and then base your business around a customer group. Because then you never have to wonder, am I targeting the right people? Are my ad dollars wasted? I know exactly who I'm selling to. I know exactly what they want. And that means less dollars on marketing is more dollars in profit. It also means premium pricing, that you don't have to compete on price, more dollars in your pocket,
Yep.
more profit in the business, a much more sustainable, long-term, powerful business than somebody who just sells a collection of random products. So that's my advice. It's an hour and 20 minutes into this thing, so I don't know if anyone's going to hear it, but I think it's super important.
I heard it. I'll spread the word even if they don't.
Awesome. Maybe cut this and put it in the front.
Maybe I might do that. Well, thank you for your time, Matt. I hope you have a great rest of your day.
Thank you, and you as well.